In this second part of a 3-part video series, we are going to discover if this video, "These settings never fail, impossible to lose with this strategy," can really live up to its claim. In the last video we discussed the RSI indicator, and in this video we will test out if the CCI indicator and its profitability in crypto trading. So let's get straight to the point after the intro. In my last video we tested out if the RSI indicator is a good indicator to detect trading signals for long and short trades. And in this video we are going to test out the CCI indicator and its usefulness for detecting useful entry signals. The original video had the bold claim that these will never fail and it's impossible to lose with this strategy, and we are going to find out if this is really the case here. Now, the strategy that uses two CCI indicators have the following settings: a short CCI with a length of 34 for detecting the pullbacks, and a long CCI with a length of 100 to detect longer trends in the market. Both these indicators should be merged into one window to create the actual visual signals. And this can be done by moving the short indicator to the pane above and then make both of these use the same scale. Now, the signals for long and short trades are as follows. For long trades, the CCI 100 should be above the center line, then wait for a pullback of the CCI 34 below the center line, and then when the CCI 34 gets above the CCI 100 again, then a long trade can happen. And for short trades, when the CCI 100 is below the center line, then there is a downward trend. Wait for the CCI 34 to get above the center line, which indicates a pullback, and then watch it get below the 100 again to get a trading signal. And in this case as well, exit signals, stop losses and risk rewards were not mentioned in the original video, so also this time I have a certain amount of freedom to choose my own best exit rules. To really find out if this strategy is any good, I once more created a Python script for automated backtests and also a TradingView strategy script to visualize this strategy on the charts. Both are downloadable from my Patreon site for patrons, just like access to my ebook about algorithmic trading for beginners. But you can also buy that book on Amazon, of course. And the European citizens that are searching for a good MiCAR licensed trading platform should look no further, because Bybit.eu is becoming one of the largest centralized exchanges in Europe. So if you want to make use of Bybit.eu and also want to get an additional welcome bonus, then click on my affiliate link in the comment section below or use Get Bybit when you sign up. And now, as for the automated backtest results, it shows that the 1 day and 4 hour time frame have the best options here. From what we can recall from the last video, the CCI has a better result overall. Not only is the max drawdown over the backtesting period only 11%, but also the win rate is better. The profit factor here is much better as well as that of the RSI tested strategy. And looking at the equity curve, we can see that using the CCI tends to catch the impulse waves the best. This is actually quite hopeful. Overall, if I look at these plots, this indeed seems to be a good combination of the same indicator that might be a candidate to build a good trading algorithm on. And if I take the PineScript strategy for example and apply it to Binance Coin for example, then adjust some of the parameters that I want to trade with, like using the zero line as a filter for bullish and bearish market, or use fixed stop losses and take profits levels or not, because these prevents us from rather longer more profitable trends. And we can also choose between more aggressive or more trend following exit signals. Then hypothetically we can attain good profits with these rules. So what can we say about the proposed CCI trading rules? Well, they are much better than the RSI, and my interpretation so far is that this is because the CCI is a much smoother indicator and thus has less false signals than the RSI. Also, in this case the used time frame is also a factor, but I hope you get the overall message here. Now, this might well be the first proposed strategy of the original video that has a good chance to be used for when I'm going to create a new personal trading algorithm for trend trading. But in the coming days I will first test out if the MACD indicator rules, that were the third proposed no-fill always win trading strategies, are good enough. The CCI idea was indeed a better choice for trading, and let's hope that the super popular MACD indicator does not let us down. So see you in the next video. Goodbye!